Hello guys. Today I will discuss about RSI or what I think is the right method to use RSI. By the way, before we go that, if you like my videos, do not forget to subscribe to the channel and like and share it. It gives me more encouragement to post more videos. So now coming back to RSI. So RSI, as we all know, is a momentum indicator. You can see I have added it at the bottom of the screen here. So this tells us if the momentum in a security or a stock is bullish or a bearish at a point of time. Now, the momentum is basically the speed with which the value of the stock is increasing or decreasing. RSI of 50 is generally considered to be kind of a neutral zone, and as we move towards 100, it becomes more and more bullish, extremely bullishness, and as we move towards 0, it shows extreme bearishness. So, the general idea that is floated around in the market is to use RSI as a kind of reversal indicator. So, what they ask you to do is that if you see RSI touching going over 80, you are supposed to short, and if you see RSI going below 20, you are supposed to go long in the market. Now, I find this whole idea to be very flawed. The primary reason is that any security can remain in an extreme bullish zone for an extended period of time. It can be there for so much time that you will give up and you will not be able to wait for that long. Like, for example, if you see here, so this is the point where you see RSI went above 80 and at this point, but it never came down. If you go on shorting here, you will have to hit a stop loss somewhere around here, and then again you see another, again it goes above 80, you again try to short it here and you see it keeps on going up. So I find this method to be very flawed because we should ideally be not trying to catch a falling knife and stuff like that, where you try to go against the general trend of the market. There is another school of thought that tells you that to use RSI along with another indicator to identify the direction of the trend and then find a reversal in that direction. It is a very rare scenario to find, so I do not have an example for you, but to give you the brief, this is a super trend indicator. It shows that right now the market is bullish. So what we do is that you look at the RSI, and at a point when you see RSI going below 20 or 30, depending upon your preference, you go long in this kind of a market. So what you do is that you go in the direction of the trend, but you go in the reversal of the trend when the trend went against the sorry when the direction went against the trend, but it reversed back to the original direction. It is a very rare scenario, so I really don't think that there is much point of looking for that kind of an indicator. Now, the third way that I think and the way that I like to use RSI is something where you try to find the momentum, get the direction, and go with the trend. So for that, what I do is that I use the overbought zone and oversold zones as 60 and 40. The name remains overbought, but I do not consider them overbought at this moment. What I consider is that they are the direction of the trend that I want to get into. So I have colored them in my chart. Now, as you see, what this is, so what I do right now is that if you look at the RSI between 40 and 60 is the zone that I think that the stock is in a neutral zone. So this is a zone that I do not want to trade in. So I do not make entries in when the market is between 40 to 60. Now, as soon as the stock crosses 60, I will like to take a long, and I will stay in this trade till the market does not come below 60 again. So what I am doing is that I am not actually trading the price, but I am trading the momentum of the stock. I see if the momentum of the stock is becoming bullish, I go long. I stay in the stock, not looking at the price, but looking at the momentum. That till the time the momentum has started declining and coming below 60, I stay there, and I will exit at after it comes below 60. Another thing along with this, what I can do is that I can also have another stop loss indicator like the super trend here. So I can have a either or thing that either it comes below 60, the RSI comes below 60, or the stock value comes below the super trend indicator or any kind of a stop loss indicator that I want to use. I can use simple moving averages, I can use exponential moving averages, I can use ATRs, trailing stops, anything that I want. So this way I catch a general part of the trend. So again, I mean, nothing is foolproof. So of course, I showed you a very good example here where it was completely kept on going up. But you are bound to get whipsaws in this also. Like for here, if you see, it again crossed 60, but then it didn't go up much. And then again, I'll have to take a small loss here and exit. Similarly here, it goes below 60, but then again, there'll be a kind of a stop loss sitting here. So you can mix and match this indicator of RSI strength along with some other indicators to get more confirmation and go in the direction of the trend. But then again, nothing is foolproof, so losses are bound to happen. The most important thing in trading is to manage your risk and control your risk. If you control your risk, then any kind of trading system can work for you. But if your risk is bad, then even if you have a holy grail, you will end up losing money. So I think that was it. That is what I wanted to talk to you about RSI. Please feel free to comment and let me know what you felt about this video. Yep. Thank you. Bye bye.